Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting the channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like, comment and share to your network so that YouTube pushes to a high level of audience, and that will motivate me to create quality content in future. In today's video, we discuss how to steadily profit from synthetic FX market and get a statistical edge of success over the broker. What makes a lot of people blow accounts? What makes a lot of people get poorer and poorer as they start trading is because the broker is the one winning. The broker have edge over them than they have edge over the broker. They don't have edge over the broker. Why the broker have edge over them? That's why. So this video is going to teach you how to have edge over the broker. We shall be using GP model. By having a good trading strategy and at least 1:2 risk reward ratio, one can have at least 5% statistical edge over the broker. Now, what it means is that after every trading cycle called net success cycle (NXC), you top the broker by net profit of 5%. Hence, you have return on investment of 1.05. Geometrical progression GP model. Some of GP, that is the some of the geometrical terms, you won't understand this, but just apply it. It's a powerful mathematical strategy. So sum of GP is A into R raised to power of n minus 1 all over R minus 1. R is equals to return on investment equals to 1.05. A is equals to initial deposit from $10 plus, or you can call it $10 plus, put that S there. N is equals to expected number of NXC. Assumption: your trading strategies, plan and risk management is such that you have 5% statistical edge over the broker. That an NSC must not go beyond 3 trading sections. It is at most 3 trading sections, meaning that what this thing means is that if you lose on the first trading session and then you lose on the second trading session, you should not lose on the third trading session. At least you shouldn't lose 3 trades in a row. For example, if you invested $100 into forex, let's put forex synthetic. It can be forex, it could be synthetic, it could be stock, it could be anything, but we focus more on forex synthetic. And every week you must have at least 1 NSC. What will be your forex net worth in space of 2 to 3 years? Assume plus 5% statistical edge. This 5% statistical edge is not the minimum. I just use it so that you will not complain. But in practice, people that have good trading plan, strategy and discipline, they usually have up to 15% to 20% statistical edge over the market, because this is what the casino use. This is the casino model. Why people lose in casino after they play for a period of time is because casino have 5% statistical edge over them. I use casino statistical edge of 5% to make sure that everybody believe in this content. Okay. Normally, people are afraid of trading, but if you can reduce the statistical edge to 5%, no matter how bad your strategy is, you can still maintain that statistical edge. Okay. But more, if you are very professional in trading, you can have statistical edge up to 15% to 20% and beyond. Are you getting it? So, but it cannot go below 5% unless you are not professional, like unless you don't know how to trade at all. That's it. So let's continue to the solution. Initial equity is $100. Return on investment is 1.05. N is equals to NSC. Average number of years is the NSC is equals to average number of years times 52 times 1. In a year we have 52 weeks. So 2 years, 3 years, the average is 2 plus 3 divided by 2, that's 1.5. If you use 1.5 upon 52, that is 78 NCS. And it should be NSC. Now, your worth will be 100 into 1.05 raised to the power of 78 minus 1, all over 1.05 minus 1. If I take you to calculator, you will see that. Open the fraction, put 100 outside the bracket, put 1.05, raise it to the power of 78, go down, go down. So first put a cursor here, just put minus, put it in front, minus 1, okay, and then 1.05 minus 1. You get it? Just we have 87,000. Let's call it $8,000 plus. Okay, so I have to correct this. I made mistake maybe during the calculation. It was a mistake, a kind of calculation error then, but this should give you 88,000 plus. 88,000 plus. Are you getting it? So if we use a statistical age of 15%, we will get $36 million plus. You are seeing it for real. Are you not seeing it? If you read this carefully, read the digits 1, 2, 3, 4, 5, 6. That's $36 million plus. $36 million plus. This is very huge in space of, what, 2 to 3 years. What if you use $1,000? What is trying to tell you is that consistency matters and having age, statistical age. You assuming you traded like every time you trade, you lose. But when you start recovering, after like in a cycle is said to be completed when you have recovered your losses and make additional profit of 5%. That is what this topic is trying to teach you. Are you getting it? So what does it mean it's not easy to be consistently having this statistical age, because for this to work you have to be constant in having this statistical age. Now I have some list of idea how this thing can be possible. Okay, you can see what I've just done here. That's why you have to join my VIP. Joining my VIP will actually put you on a minimum of 5% statistical age over the market, meaning that you can have plus 5% and beyond, okay, over the broadcast. Are you getting it? So look at what I have just done. Price or buy V751S at so price time Saturday, meaning that latest by like before Saturday ends, this signal will be activated. Rise or buy that asset should be volatility 10 index, which I have not put. Rise or buy volatility 10 index time Sunday, that is somewhere today it will buy. 4 or say V25. Price is not shown, but is there. These signals will be posted in the VIP, so you will not have access to it because you have not joined the VIP signal channel. You have to join to change your life. So the time is Sunday, which is somewhere today being Sunday. Volatility 25 index will be selling. Okay, but that's by the way. But I have other few points that, like, what I just do is to know the right time to buy or sell and the price. Know the right price and right time. So it becomes a kind of space time problem, because some people lose money when they trade a signal, when they trade a direction, or like when they buy or sell at wrong price and at wrong time. For instance, volatility 75 index was bought. Let me go to a chart. For instance, I'm going to show you something so that this becomes a reality. Okay, see, this is volatility 75 index. This is we are on the H4 time frame. I'm going to use H4 time frame. Let's wait for this thing to come. Now, you see this market. It is making higher high if you check carefully in the H4. And you know that H4 higher high is going to be great. It's making higher high. It's making higher high. Now, if you look at the price action, it's uptrend. Higher high means uptrend. So if I pull out my trend line, or let me use arrow line, using, not every trade you can model with trend line. You can that is not every trade you can model with trend line. You can use the turning point, the previous resistance and support levels broken and respected. This level was broken, so we expect price to come here and possibly, if price is coming here, we have to do a second test if it will come to this level. We don't just enter. We have to do more confirmation if it will react to this level, and then it will do what? Push. So now, any person that buy this market at this time is going to do what? Lose, because this is not the right time to sell. And any person that sell this market, this is not the right time to buy. And any person that sell this market is going to lose, because you are selling in a trending market. So it's a probabilistic issue. This content work well based on probabilistic behavior of the market. You don't know when a market is going to do anything. You don't know. All of them are probabilistic. But if you are trend, if you are strategic, if you are disciplined, you can have this 5% statistical edge. Okay, so we are waiting for price. We are waiting for price to come here, and then we do a kind of back test to see if it will have a support here to buy. It might come here and try to have a support, just like when this market break here, it goes up. Instead of it to have support at this level, it have to come back near here, like near this place, to have support. So you see how market is behaving. It doesn't behave in a perfect way. It behaves in a cunning and confusing manner. But you need to be strategic for things to work. It's not a must you will trade every trade you see. If you have trading plan, if you really want to maintain this 5% or more than 5% statistical edge over the program, you must avoid some trade. You must avoid many trade and trade only few trade that will work. Even if it's only one trade in a week, it's okay. Are you getting it? You saw the example I gave during the calculation part. Okay, so that's what I really mean. I will take you back to the next thing that will help you. And it's all about trading in a trending market. Like, you are not trading the range market, you are not trading the shopping market, you are trading only trend. It's a strategy. I want to just use it as a typical example here. Okay, see, this strategy actually is trying to help you be positive in your statistical edge. You see, this is uptrend, this is downtrend. For this uptrend, if you are selling in this uptrend market, and also if you are buying at wrong prices and wrong time, you are going to have a negative statistical edge. If you have a negative statistical edge, you will ever be broke and quit forex trading. But if in uptrend, for instance, you are buying during the impulse move, like you buy at the right price at the right time following the impulse move. Let me show you something. You are supposed to draw your trend line. So whenever price hits the trend line, you buy for uptrend, and whenever price hits whenever like the market retraces back to the trend line, the downtrend line, you sell. I get it. You sell. If it hits it, you sell. It will go down. If it hits it, you buy. It will go up for uptrend. I get it. So if you are disciplined and strategic, you discover that you have a positive statistical edge. Even if it is 1%, once you are consistently making that keeping that 1% constant and not going below it, an infinity of time, let's say in the space of 5 years, you will be a multi-millionaire forex trader. I'm telling you the truth. So if you are the type that in the uptrend market you will be selling, you will definitely have a negative statistical edge in the market. If you are the type that is buying in uptrend market, but you buy before the market react to the trend line, or you didn't even test to know if that trend will hold, if the impulse move will hold, because market move in impulse retracement. If you didn't wait for if you didn't confirm that this retracement, this impulsive move is gonna hold, and you just enter, you will definitely have a negative statistical edge in the market. So you have to learn all this, practice it. Forex trading is not gambling. If you are doing it for luck, then you will be like losers in the casino field or casino worlds. But if you are doing it as a responsible trading with plan and strategy, with the risk management, with the with discipline, taking few trades that wins and not taking many trades that lose, you discover that you will have a positive statistical edge. And the mathematical model here gonna make you rich. Imagine you just put $100 and just a very small 5% statistical edge, you are making $8,000. $100, you're making $8,000 in space of 2 to 3 years. That's crazy. What if you put $1,000? So your initial investment matters a lot. If you are starting forex market or synthetic market, don't start with $10. Don't start with $100. After you have become professional, you are sure that you know how to keep your statistical edge positive. Try to start with $500 to $1,000 plus above. Try. If you don't have the money, don't start. Don't just start with small money, because what we do here is based on mathematics. I get it. If you lower your take for instance you start with $10. You have wasted your time. If you start with $10, this amount, this is going to be reduced by $10. It will now be 8.8. That is 8.8k. That is $8,000 plus, which is foolishness. You wasted your energy. Make sure your initial investment is big. Are you getting it? And the more it is bigger, the shorter the number of period it will take to hit some big amount of net worth, like what in millions of dollars. You know, imagine I started with a $10,000 account. I put $10,000 here. If you run the calculator, what you are seeing here is going to go by 100,000. It will go by 100,000. Like this is what I mean. Let's do calculator. On a I'm not basing this. I assume that the time is constant. I vary the initial equity, like the NXC is constant, the net success cycle is constant. I vary the initial equity. So if the $100 in initial equity gave us 8,000k, like it's I think we'll put it in the script. Give us the script. That's the we have it's 8,000. So just take approximation. It's 8,000. Approximation of 8,000 times 100, because you have instead of using $100 initial investment, you start with 10,000. So what is the relationship between $100 and $10,000? $10,000 is 100 times $100. So you are multiplying this by 100. You are multiplying it 8,000 by 100. If you do that, we have 8.8 million dollars. So here the time is the same, but what is varying is the equity. And another thing that is constant is the statistical age. Don't mind what happened here. What happened here is that we vary the statistical age and keep the time constant, and then we vary the statistical age, we keep the time constant. That's why we have 36 million. So if we have a good statistical age, your equity increases so fast. Are you getting it? In the same number of time. A good statistical age with the same number of time, like the higher your statistical age with the same number of time, you are going to make huge profit, like going in millions, even with smallest startup equity. Are you getting it? So what's happened in the previous calculation I did is that I use the same statistical age of the minimum statistical age of 5%, and I vary. I kept also the time constant, and I vary the initial investment. So there are many ways to play around with that formula. You can vary whatever you are varying. Once so long you vary, if you vary the R, your equity will increase fast. If you vary the A, your equity will increase fast. If you vary the N, your equity will increase fast. In upcoming video, I will do the calculus of these equations. I will do more video about the calculus and to know the effect of varying each of the variables, like changing each of the variable and keeping other ones constant. I will see which one is better, which one will give us the best success, which one is riskier, which one is less riskier, and all of that. I'm going to treat that in the future. I'm going to release the content. Try to like this content and share and comment so that I'll have more motivation to do that video, because it's very necessary, so that you'll be focused, you'll be aware of yourself, you will see your success even before the success happens. I get it. You will have your third eye open. Think about this. But instead of wasting time to learn the skill, have the professionality, why not enroll for my VIP signal channel, where we do like the signals? Let me show you something before I continue. Okay, now in the VIP, this is how the signal will be like. You see the signal by V time. Now you see the 3 TP. We give a minimum of 3 TPs, like from 3 and above. That is minimum of 3 TPs. Then we give you the stop loss. We give you the loss sizes per position and the equity range where you can apply the loss size. Are you seeing this? Are you seeing this? Meaning that they can open a minimum of 3 positions. A minimum of 3 positions, because the number of TP determines the number of positions to be opened. It's stated in the pinned messages in my VIP channel. You can't go beyond this, because this has been modeled to give you statistical edge. All these loss sizes have been calculated with a very strong mathematical formulas that will make sure that your trading give you at least 5% statistical edge. The risk reward ratio is included inside this loss sizing or position sizing calculations. You don't need to do this. Everything has been done for you. All you need to do is to copy this trade in real time and paste it in your MT5, and you make profit. We hardly lose in the VIP. So I'll be ending this video. Thank you for staying to this point. Bye for now.
Give me all you've got if you're prepared to break the silence. I'll be out in the sunshine, running beside the lion. I've been feeling down, but I've got if you're prepared to break the silence.